Welcome back. It's time for the finance show. Let's get right into it. Starting, New York Community Bank, $1 billion cash infusion. The banks are safe for now. New York Community Bank, which we spoke about yesterday, they were having some cash issues. They were looking to raise up some money because they're scared of going out of business, Turns out a lot of their loans were bad. The Signature Bank acquisition wasn't great. But yeah, so now they got $1 billion cash infusion. They just cut the dividend down to 1 cent from 5 cents. And they said that they lost 7% of all their deposits in the last month. But they're confident that this $1 billion cash infusion should be able to hold them off, stop people from leaving. Because ultimately that was the issue. If everyone takes out their money, they can't, they have to sell off some assets at losses. They got some bad loans. They can't take it back. So now, with this cash infusion, this cutting the dividend, I think they should have fully cut the dividend, but whatever, 1 cent is fine. And they lost 7% of their deposits in a month. This should probably stabilize. They'll probably lose a few more percentages, but hopefully, if they don't lose more deposits, they should be fine. They should be in the clear. Now going to Apple. Turns out Apple was spending $1 billion a year on their car division. For those who don't know, Apple just canceled their entire car division. They've been working on this idea of this, autonomous, electric, fully integrated car for like the past decade or so. But everyone kind of thought that these guys, they weren't spending that much money. Maybe they had a few guys in a lab. They poached, some pretty big people from a lot of car manufacturers that made them mad. But yeah, it turns out they're spending $1 billion a year on this R&D. Turns out it's hard to make an electric car that's fully autonomous. Tesla can't do it. Cruise isn't going to do it. Waymo isn't going to do it. And now, Apple's saying they're not going to do it either. Because originally they wanted to build this, this fully autonomous car without a steering wheel, all electric, all Apple, fully integrated ecosystem. They poached all these, executives from Ford, from Mercedes, from BMW. They got all these top engineers. They weren't able to make this car. So then at some point they tried to, partner with these companies. But all these companies were pissed off at Apple for stealing all their top level talent, right? So they weren't able to partner with everything. So now they're just canning the whole thing. $1 billion a year in savings, which isn't that much for Apple, to be honest. They just got fined $2 billion in the EU about, anti-competitive music streaming stuff, because Spotify's, they've been complaining. $2 billion a year is $2 billion in fines is nothing. That's 2 years of Apple car research. For these companies, $2 billion are literally chump change. They don't even see it. They don't even know. I bet Apple executives don't even know they got fined. Because they just take it out of the account and it's nothing. It's nothing to these people. But yeah, turns out making the car is hard. If they wanted a high margin product that are, they'll mind numb people. The iPhone does it just as good, all right? It does it just as well. And if you're really interested, Apple, if you're really interested in increasing your market share, why don't you start targeting kids more? You already have a whole generation of iPad kids, right? They need to watch CoComelon on their $500 iPad. But why not make an entire line dedicated for people, toddlers under the age of 5? You can have, mini iPad to watch CoComelon, to watch Skibbity Toilet. You can have, Apple AirPods, but for kids. Maybe have some baby monitors, right? And all these things will cost thousands of dollars, but it'll get a whole new generation locked in. Because already now you look at high schools, right? You look at elementary schools these days. If you don't have an iPhone, you're getting bullied. You're getting kicked out of the group. You will not be picked for dodgeball because you have, a Samsung. People will make fun of you on Snapchat for having a Samsung. That's just the reality of the situation. So Apple's been doing a pretty good job with that. To be honest, yeah, they've been doing well. Funny thing, so yesterday we talked about CrowdStrike's earnings, which were very good. Turns out Nancy Pelosi bought CrowdStrike stock back in 2020. She doesn't miss. Nancy Pelosi does not miss. But, you know, she's making bank on all these trades. Palo Alto now. So she's got to see something we're not seeing. The reason why she didn't buy the entire cybersecurity space is she's got to leave you somewhere, you know, she's got to give you some opportunities to make money. This is why she didn't touch Okta, because she's being so generous that she's letting all you people, you know, buy these stocks that she isn't invested in, but it's just, you know, in the same industry. She's giving you hints. She's giving out her playbook. And this is what you should be. You should be following Nancy Pelosi's trades. That's just how it should work. You know, you thought the economy was fine because, you know, a regional bank just got saved. But turns out layoffs in February are hitting almost an all-time high, you know. Layoffs planned in February hit 84,000 in America. This is the highest number since the Great Recession. In February of 2009, 186,000 people were laid off. So, you know, this is like, it's not that, it's like 40% of it. It's not great. It's not great to have 84,000 people laid off. But it's okay, because if you look at the job openings and the unemployment level, sure, job openings, you know, they're steadily declining at quite a fast pace. But it's okay because unemployment is still low enough and that people who need jobs. Well, now, so all these 84,000 people, they can all go to the labor market. They can all go get the shit job that nobody wants. All of these job openings, people have this idea that all of these open jobs are for, you know, these high-level engineering jobs at like Google and Microsoft. No, they're not. They're for the minimum wage shitty jobs where you're cleaning sludge out of, you know, a septic tank. That's what the jobs are. You're making $7.50 an hour to work at McDonald's. That's the job. That's all there is. And if you don't start taking these jobs, you know what they're going to do? They'll replace you with AI, and then you'll start complaining about how there's no more jobs. It's going to be your fault. So if you just got fired from Meta, okay, and everyone's seen those TikToks of those people, day in the life of a Meta employee, right? And then they do no work. Maybe that's why you're getting fired. Maybe that's why you're getting laid off. But it's okay. You'll get your severance package. But once that runs out, go get a job, you know, at your McDonald's, at your Wendy's. Save the economy. Save the economy by lowering your wage. That'll lower CPI and it'll all work out. Nvidia just hit a new high. Finally, took them long enough. It's been what, a week since they hit their last high? Nvidia keeps propping up the market. If Nvidia's up, the market's up. That's it. They're nearing a trillion. They're going to hit a trillion very soon. I think their stock just hit 900. People are already putting, you know, 1,000, 1,050 price targets. Sure, just keep popping those numbers up. It doesn't have to be based on anything. Fundamentals don't matter. But, you know, in reality, you know, Nvidia is one of the few companies that's been able to grow at such a crazy amount and have their price to earnings ratio, their PE ratio, stay the same. If you look back in 2018, their PE was still 55, and now it's still 55. And yet their growth's been able, so truly it's been pretty good. I would like to see the PE go down a little bit, but you know, if they keep hitting how they're hitting, 150% growth, 400% growth, why not have a PE of 50? Why not have a PE of 100? Nvidia can support it. I want to see Nvidia at 2,000 by the end of the year. That's how we're going to get through this entire recession. People are losing their jobs, doesn't matter. Nvidia is now the biggest company in the planet. If Nvidia doesn't hit 2 trillion, it's over. Speaking of things that are over, Exxon and Chevron are beefing again. Exxon, you know, they're filing in court about their whole, you know, Chevron wants to buy Hess Oil, okay? The $64 billion acquisition. It's part of this huge, you know, thing in the oil fields where all the oil companies, they're merging together. They want to make more money. Sure, do it. But the reason why Chevron really wants to buy Hess is because of their 30% stake in the oil field in Guyana, right? But here's the thing, Exxon also owns a portion of that. It's Exxon, Hess, and some Chinese whatever. They own this oil field in Guyana. It's the biggest oil field discovery recently, right? And Exxon's saying, hey, if Chevron's going to buy Hess, we want to buy, Hess's stake. They're saying part of the agreement, which isn't that public, right? But basically part of the agreement is that Exxon has the right to buy out Hess's stake before anyone else. That's the whole thing. Chevron's saying, no, it doesn't apply because, we're not buying just the stake, we're buying the whole company. But basically, now Exxon is filing in court. They're doing this whole thing in court. They're saying, listen, courts, this was the agreement. And, if Exxon gets this deal, Chevron will 100% terminate the Hess deal. They're saying they won't, they will. If Exxon gets this, this right of first refusal, Exxon's not buying Hess. Hess is also saying that they're going to push back on the Chevron deal for just a little bit before they finalize it to see what happens with this ruling. If the courts say no to Exxon and they say, Chevron can buy it and they have all the rights, yeah, Chevron will buy Hess. If not, they'll walk away. Chevron will buy someone else. They'll buy, a Diamondback or whatever. And that's just what it's going to be. But they're beefing right now. I don't know why they're beefing. Oil prices are steady and they're steady high. These guys are making good cash. They're making good money. But, at some point they're going to run out of inventory. So you need these new humongous oil fields to keep up production for the next 50 years, right? The world isn't going electric in the next 20 years. That's not just going to happen. You're going to run out of oil first before we go fully electric. That's just the reality. Speaking of electric stuff, Rivian, the number one performing stock in the electric, vehicle market, it's not. Their stock's been plummeting. But stock's been up today because they just announced 3 new cars. 2 of those new cars were complete surprises to investors. And they're saying, we're going to save $2 billion by pausing their Georgia plant construction. The new cars are going to be cheaper models. Their R2 car, they introduced the R2, the R3, and then the R3 whatever, right, as their new cars. And the R2s would come in at $45,000 starting. That's pretty competitive. And they said they're going to start production in 2026. As if Rivian is going to stay in business till 2026. Unlikely. $2 billion in cost savings will probably hold them off for a bit because these guys just eat cash. They see cash, they eat it. Where does the cash go? Nobody knows. Nobody knows. But they have 4 cars on the market right now. They're 2 cars on the market right now, 2 in whatever development. And they range from $70,000 to $100,000 for their R1 models. How are they not making money on it? I don't know. Nobody knows how they're not making it. It's just a money pit. Just keep throwing money into the pit called Rivian, and at some point something will happen. The stock will just keep going down, but at some point it'll hit zero. You've got Amazon backing Rivian. You've got all these things. So investors are happy to hear this good news. $2 billion in savings. Maybe that'll hold them off for long enough for them to do a new capital raise, whatever. But basically, what the electric market is seeing is that there's a pretty big slowdown in electric vehicles. That's it. Turns out inflation's kind of hitting hard, and you got to start cutting prices. But unless you're Tesla, cutting prices doesn't work if you're already losing $40,000 per car, right? So that's just, people aren't as enthusiastic about electric vehicles right now as they were, 2 years ago. That's just, maybe there's a little bit of saturation in the market for people who can afford electric cars and people who want it. Finally, last story of today. MicroStrategy is buying more Bitcoin. They just upsized, convertible note offering. $700 million convertible note offering. They just upsized to buy more Bitcoin. Michael Saylor knows what's up. He knows what's going on. Does MicroStrategy have another business besides buying Bitcoin with debt? Who knows? Do you know what MicroStrategy does? No, you don't. Nobody knows what MicroStrategy does. Is it a SaaS business? Is it whatever? Who cares? Nobody cares what MicroStrategy actually does as long as Michael Saylor keeps buying more Bitcoin with debt. I love how he's buying more Bitcoin at all-time highs with more debt. That's great. That's how businesses should work. If New York Community Bank should take a few notes from Michael Saylor. If New York Community Bank takes that $1 billion they got as a cash infusion, they put it on Bitcoin, I'm telling you right now, they wouldn't be failing. They would not be failing. And this is financial advice. Another last story that I completely overlooked on my notes. Abercrombie and Fitch. Abercrombie and Fitch. Whatever they're called, okay? This stock's been a monster. This stock has gone up like 200% over the last 2 years. This stock has been roaring back. They just reported their Q4 earnings, up 28%, with earnings at $2.97 versus $2.82 expected. But the stock's down. Why? Well, they reported their full year guidance for next year, and they're only going to rise 4 to 6%. It's a pretty big slowdown. This year they rose 21% in revenue. So it's a pretty big slowdown. Investors aren't too happy about that. If you're trading at a 30 PE and you're saying you're going to raise, revenue 4 to 6%, it's not going to go over well with investors. That's the reality. But, the stock's been dominating for a while now. These guys have been printing cash. Their stock's been printing up. And, at some point there's got to be a slowdown. So that's just the reality of it. Anyways, that's a great show. Thank you for listening, and we'll catch you next time.